Hey, good morning. It is about 6:30 a.m. on Wall Street. My microwave says 6:34. That's 3 hours roughly before the open of the stock market. Welcome to QuantBox Live. This is where we get our macro on and uncover the best fundamental investment opportunities across global markets. S&P 500, gotcha. Gold, gotcha. Gold, oil, commodities, currencies, gotcha. We'll cover all that today. Our AI driven data analysis of sentiment, inflation, employment, GDP, technical trends, open trade positioning, and seasonality uncover the best fundamental investment and opportunities across the global markets. We also cover market activity. What is the VIX doing? For example. Ooh, good call. Good call, Wayne. Hey, you're welcome. By the way, my name is Wayne McDonald. I'm the founder of QuantBox, but I'm also a Harvard-educated economist. Also have a master's degree in financial management. I've been a macroeconomic trend trader for about 20 years, and before that, I was a venture capitalist. Anyways, so I love everything macro because it sets up the long-term trends based on economic data. QuantBox automates that process. So then you can find the trend. And then, hey, if the trend is up, you look to buy dips technically. We drill down into these fundamentals. We automate things like the Commitment of Traders report and make it easy to read. You can conduct your own research. You can compare inflation and GDP between different economies. We also can predict into the future inflation levels and interest rate levels of different economies. So imagine you knew not only which central banks are raising interest rates, but which ones are going to pause and then cut the fastest next year. We have all that data because we pull it directly out of the central banks themselves. So anyways, if you're watching this and it's 10:30 or 11 o'clock in the morning on YouTube, guess what? You should be here now with us live. Take a test drive. $8. We'll give you a week. And inside of that, not only can you try QuantBox, but there's also included a macroeconomics course, which is about 16 hours long. And it also includes a training course on how to use all these statistical analysis tools, like the scatter plot, for example. Anyways, quantbox.co, get on with it. You know you want to do it. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Logging in. Let's go to, by the way, there's the macroeconomic training course. There's the QuantBox training course. This is where you can attend all the live strategies like the one we're doing now. And it's in like a Zoom room type thing, but it's all built inside a QuantBox. It's real pretty. It's nice. All right, let's log in. But Wayne, I don't have $8. I'm sorry, I can't help. Okay. So where in the world are we right now? The markets are flat. Do you think it might be because we have a big Fed meeting later today? Yeah, maybe. Let me organize this by bias. There we go. Oh, and it's funny, it puts neutral somewhere else. Interesting. I'll have to look into that. Look at this. Bitcoin is down. Remember how we were tickling 30,000 as support, then we're tickling 30,000 as resistance. Now back below 30K. That's interesting. Also, oil was on its way up to $8. Remember all that? $80. Then it got really close. And then it stopped, and now it's coming down. My camera's not working. I don't know why. You don't need it. I'll just turn it off. Anyways, cool. So 10-year T-note moving back toward 4.0. Okay. Gold slightly up, S&P 500 slightly up, euro dollar slightly up. All very, very slightly up. Here's the global stock markets over the last 7 days, or actually more than 7 days, but over time. And you can see they're converging closer and closer. So, like the Japanese stock market was way above all the other stock markets globally. And now they're converging back down, back down, back down, back down. Okay. So, right. You can see the UK stock market doing hardly anything relative to everybody else. Interesting. So, let me open up the nav and let's go into the scatter plot. And there's quite a few things that are bullish. See this quadrant up here, bullish and expected. So all of this stuff, QuantBox is scored as being bullish. And they're up today. Duh. Yeah, okay. They seem to be up today. Okay. And they all have positive scores. So this is right as rain. NASI doing really well. Up. Google reported very well last night. Guess what? Google makes money. Yeah, cool. Yeah, five, one of the five companies that make money. Okay, great. So it made money. So S&P 500 is up, Nasdaq's up. Now Bitcoin's kind of flattish and has a big positive score. So actually, Bitcoin is a bit of a laggard, but it's in that disinflationary pressure, right? It was way above 30, then it came down to 30, then it was stuck at 30, and now it's down to 29,000. If it goes any lower, it's going to fall into negative territory. Aussie yen down, Aussie Swissy down, CAD Swissy down. Okay, Kiwi yen down, Kiwi Swissy down. You're starting to see Kiwi and Swissy relatively strong, and that is as expected. So, like for example, Aussie yen has a score of -3. The one that's kind of out here is it's interesting how the German stock market is scoring -2 on QuantBox, and it's the only stock market that is not like ridiculously up today. Kind of interesting. It's struggling. Well, I guess where's FTSE? Maybe FTSE's not even doing that good. Oh, there's FTSE. Well, the FTSE has a +2 score, and the DAX has a -2 score. That's kind of interesting. There's oil being the outlier. Remember, our target 2 weeks ago was 80. We got two shakes of a lamb's tail from 80, and now it's down. What do you think? Is that profit target? Is that profit taking? Yeah, yeah, probably. So, even though this is got a positive score of 3, it's down today, but I think we understand what that might be. How are we doing over the last 7 days? Oil is still up 4%, despite falling today significantly. Today it's down 1%, but still up 4% for the week. Okay, yields are rising on the 10-year T note again, up 3% for the week. FTSE up 2.65 for the week. Dow up 2.5 for the week. Okay, Bitcoin down 3% for the week. So there's definitely something going on here, huh? Part of it, I think, was Bitcoin rallied so much, let's just say from 20,000 to 30,000, because it looked like it was going to be the only cryptocurrency an institution in the United States could invest in. And suddenly, in regards to XRP and a bunch of other things, you're like, oh my God, Elon is going to use Dogecoin. So Dogecoin is up again. Okay. Which means now you don't need to only put money into Bitcoin. So it's like maybe some money has come out of Bitcoin and gone into Dogecoin. All right, well, you do you. Uh, I've already cornered the market on Shiba Inu, so Maybe that can go back. Come on, Shiba Inu. I think it's 0.0000000075 today. Yeah, I'm going to get rich. It's going to go to $10. I'm going to have millions, hundreds of millions. It's going to be great. I'm going to buy a yacht and sink it on purpose just because I can. That's how much Shiba Inu I got. What's going on in the world right now? Nothing really. Just ever so slightly on a weekly basis, risk off. Nothing else going on in the world. Okay, looking at the VIX today, up 1.35, yen up 0.43, gold up 3.8, S&P 500 up 0.28. Yield in the 10-year, nothing. Dixie, negative 0.2 for a total score of 0. What do you think? Should you load the boat and try to get rich before the big Fed meeting? Are these the market conditions that are ripe for the taking? No, no, no. 0.00000. We're a total of risk on or risk off 0. Nothing's happening, bruh. On the bigger scale, VIX 4, right? Almost 4.5. Yen about 3. Gold about 2.5. Big move in S&P 500. Bigger move, right? To offset that by 4.42. So, there's a plus one, there's a negative one. Dixie, yeah. So a big rip roaring result of mixed bag. So there's no real long-term or short-term trend going on. This isn't quantitative analysis of economic data. This is market intelligence. Remember, the market is thinking 3, 6, 9, 12 months in advance. They're not thinking about the Fed meeting today. And they're not saying, well, if you look at GDP in the UK relative to New Zealand, no, that's quantitative analysis of economic data. That's much longer term stuff. This is just what's happening now in the markets. So you might have a fundamental bias. You might be bullish on something or bearish on something. But generally speaking, because QuantBox now calculates all this market data, okay, two different ways, by the way. This is all market data. This is market data. This is what's happening right now, And this says, yeah, there's a little bit of bullishness or bearishness. Like there's mostly as expected, but when you look at the scale, 0.8 is the biggest winner. The biggest loser is 0.1. But if you get rid of some of these things, get rid of stock indices. You're looking at currencies, right? Like the biggest winners and biggest losers are less than 1%. So it's really like it's screaming, basically as expected, but nothing really important happening. Oh, I lost my drawing tool. Hang on. And so you should feel good about what's going on. There's just not a lot going on. It's probably that Fed meeting, right? That event risk. Okay, let me get my drawing tool back. So when you see generally, like if you were to visualize this in your calculations of y equals mx plus b, you want to look at this. We call this the run. And this is the rise. The hypotenuse is the slope of the mean. Okay, that's right. So as we go this way, there's a positive slope. And that's good. That tells us the scale tells us there's not a lot going on, but the market is behaving as one would expect. So that's cool. One of the things that we're looking at today, if we do a little bit of research here. Okay, we have a Fed meeting today. Not going to be able to attend. I have a family obligation that's very, very important. So I will be doing that. Um, Here's the summary of economic projections. Is this easier to read than the Fed report? Yeah. So, anyways, you're welcome. This is a new feature, one of the many new features I've added. And okay, this is where we are now. And this is interest rates projected out to next year. So the world is asking, we're in here this right in this moment, and the world is pricing in no more Fed hikes after this one today. And I'm like, huh, okay. I don't know where they get that information. I don't know. When you hear these, strategists from giant banks and stuff like that, big hedge fund managers on Bloomberg and CNBC, they're talking about one and done, that there's no more coming. And that might be true. I don't know what the future is. But the Fed told us there's two, not one. I don't know where they get their information. Why only one? The Fed told us two. It's in the summary of economic projections. So they might be right. Maybe the Fed in September changes their projections, but I only know what's fact. So that's interesting. So there might be a shocking statement today in the press conference where people say, "Oh my God, there's another one in November," and everyone will freak out. Yeah, but we already know this actually. So whatever. This is what the Fed told us inflation will be by 2025. Isn't this nice? When we look at this, this shows us, see, that there's another interest rate hike. See, it's tiny. It's hard to see. Okay, 5.35, 5.43, 5.43, 5.43. Cut third quarter of next year. You see that? So here's where we are. They're going to raise, then they're going to raise again, then they're going to pause, and cut. How does QuantBox do this crazy math to predict the future? Well, first of all, I bought a genie in a bottle on eBay. I also bought a crystal ball, and I got a real good deal on the London Bridge. It was pretty good. I got a triple package. I bought the London Bridge. I own it. It's mine. I also own land on the moon. Yep. So when Elon builds a space station, I'll own some land. It was good. I got a great package deal. But anyways, this is what the Fed has told us. So when somebody goes on Bloomberg and CNBC and says one more rate hike and they're done, that's an opinion. QuantBox doesn't have an opinion. So if the Fed changes its mind, well, then QuantBox will update. But this is all buried in the summary of economic projections. This is what the quants at the Fed have predicted. I think it's out of there's something called, there's a green book, there's a blue book, and this is all before the beige book. But that would have been discussed yesterday. We won't get an update until the next Fed meeting, not this Fed meeting. But isn't it nice now that you have facts instead of relying on some YouTube guru? Stop listening to YouTube gurus. So we'll leave that. Inflation. I mean, we already kind of have this kind of stuff. All right, cool. So let's take a look at a heat map. Oh, not the heat map. I want to go to where have I put it? I've moved everything around. Oh, there we go. So remember in that scatter plot I was showing you, some things were had positive scores and some things had negative scores. And then we look at what actually happened today. Did those assets go up? Did they go down? The scatter plot is looking at these numbers. 7 to -3 is the biggest, right? The biggest loser is -3. The biggest winner is +7. And then the scatter plot looks at what did it actually do today? Did the Dow actually go up in the last 24 hours or down? And that's what the scatter plot is doing for you. So you can look at all this and be able to look, compare the score versus performance, the economics versus the market. And that's why the scatter plot is very, very powerful. Very, very powerful. So you can go through here and try to figure out what you want to do today, or you go to the scatter plot and say, I like these. This is what should be happening. Or you might actually be more interested in these because they're not doing what you would expect them to do and they may be out of position. So, like, let's look at pound dollar slightly out of position. So, we could go here and pull up pound dollar. Okay. And it's actually been up quite a bit recently. Look at the difference in scale. Typically, this asset is falling this time of year. There's that big Canada Day shift, huh? So seasonality, looking over the last 5 years and over the last 20 years, this asset tends to fall more often than it rises. And yet it was way up. Here's the technical analysis. Okay. It had a high, it had a pullback, and we're trying to continue back up. Okay. We're currently at 129. If the market if the market stays bullish on this pair, the best case scenario is we could be on our way to 130.70. We're only at 129. So that's almost 200 pips up. That's the best case if market conditions stay the same. Technically, this is only technical analysis up there, but QuantBox looks at the technical analysis. Base case 129.55. Worst case, we stay kind of where we are, a drop and a slight recovery. But that might eventually turn us more bearish. Okay. So we're on our way to there, 125.55. So maybe a little day trade, but it could turn into a nice little swing trade. There's no targets right now because it's neutral. Why are we neutral? Retail sentiment 50-50. Long short. Retail has no idea what's going on. So that means nothing is way out of position this by this analysis. It's not like, this is 80 or 90% one way. This is confusing. So you're getting downward and upward pressure at the same time. So which direction is it going to go? We don't know. If we look at pound dollar institutionally, once again, 65% long pound, 63% long dollar. What direction is it going to go? We don't know. Okay. It's kind of going the wrong way, or, it's kind of not doing what it normally does. So something unique is happening with this asset, and you might be pairing the wrong ones. You want to look where institutional investors are heavily long one asset and heavily short the other asset at the same time. But once again, institutional is conflicting, retail is conflicting. So there's nothing really to do on this asset unless you're predicting a change in all of this. So QuantBox is doing comparative analysis at this point. It's not predicting the future, it's explaining what is. This information comes out of the Commitment of Traders report. Fundamentals between these two might paint a different picture. GDP in the United States is at 2. GDP in the UK, let's just call it 0. Because 0.1, I don't think you could even calculate the difference between 0 and 0.1. In real true statistical analysis, there's no real difference. That's a big fat 0. Okay. GDP is slowing in the United States, but I mean, dude, 2 is good, 0 is not good. Inflation in the United States is getting down 3 something. I should probably add, I think I need to add some decimal points there. So maybe I'll put that in my notes. I need to add a decimal because I know it's not 3, but it's, let's call it 3.8. Inflation in the UK is 7.9, and it's fallen almost 1%. You're like, whoa, it's fallen 1%, and it's still 8% inflation. Oh, God. Crazy, isn't it? Unemployment, okay. Both countries still haven't hit massive recession, but unemployment is rising just ever so slightly in the UK, not in the US. And interest rates are about the same. And we didn't raise in the United States last meeting. The Bank of England's raising very quickly. But the thing is, when you look at inflation, 7 versus 3, that suggests this 5 is going to turn into 6 or maybe even 7. Okay. So as we get closer to a real target on interest rates in the United States, this will go from attracting money. So when we pause, there's more likely to be US dollar weakness because the worst of the pain is over. It's sort of like the cancer patient is allowed to go home. Good, 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 good. Not out of the woods yet, but you don't need, right? So if we're not, that would weaken the dollar, and weak dollar is actually good. Don't think weak dollar is bad. Weak dollar is good. When you're a reserve currency, a weak dollar is good. But if this is going to 7, then I would suspect at some point that in of itself becomes a carry trade, especially if the dollar is weakening anyways, and the UK is on its way to 7%. And then using the central bank tool, you can start looking and comparing next year's interest rates. So if 1 year from now the Fed starts cutting and the UK is at 7 and leaving it at 7, then it becomes even more of a carry trade, which is kind of interesting. And so at some point, if the ECB, sorry, if the Bank of England is going not just to 5 but to 6, not just to 6 to 7, that in of itself can become a carry trade, and the pound then could get strong. So if you thought that narrative was coming, a Fed, the end of the Fed rate hikes is coming soon, like this year, not next. And Bank of England has to stay hawkish and raise interest rates higher. When would you start to try to put those trades on? That's what QuantBox is helping you with. When would you look to start doing a pound dollar long? We don't know if it'll happen, but at least you know your narrative of higher interest rates in the UK as they're right as they need to fix their economy, and the US economy is already fixed at that point, let's say. I don't know if that'll be actually true, but there's your story, there's your investing philosophy, there's your bias. QuantBox would help you time that, but also if you can confirm it technically as well, you're able to let your winners run because you have a confidence level based on your investment thesis. It would be self-fulfilling. You're confident because you believe in what you're doing, that there's a rationale behind what you're doing. And so to answer that question, if this is the best time of year to put that trade on. We don't know if that's the right trade. We don't know if your trade philosophy is right. Maybe the Bank of England doesn't go to 7. Maybe the Fed doesn't pause. And that trade never presents itself. Well, that's why we do technical analysis, right? So if this is falling and your thesis is that this will be rising most of next year, well, you wouldn't buy it when it's falling. You'd buy it when it's rising because you're a bull. But if you look at what's happened over the last 5 years and over the last 20 years, that period between August, September, October is when this asset tends to go up. And it tends to go up what? 1, 2, 3, 4 months. Would that bring you confidence if you had an investment thesis trading the divergence between the two economies and you confirmed it technically and you know psychologically that these things tend to run? Can you let your winners run? And I hope QuantBox does that for you. I hope ultimately it brings confidence, not just focus to your trading. You know why you're making the trade. And now you're trying to analyze the best time of year. So now you're even answering when. And if the trade presents itself technically, you take it. uh, And then you have confidence to let it run, not just for 3 hours or 3 days or 3 weeks, maybe even 3 months. Holy smokes. Maybe it brings you confidence to not only let it run, but add a few more along the way. So now you're compounding, all because of confidence. And that's the change, right? That I hope QuantBox brings for you. You have to have confidence if you're going to let your winners run. And for many retail traders, that's not a small change. That's not a marginal improvement to your trading. That's a radical change in the way you trade. Having the confidence to let your winners run. And that's what institutions do. So I hope it brings that to you. So, big Fed meeting today. Be careful that the Fed meeting, well, we already know they're going to raise. So the only thing that could happen is they don't raise, but there's almost like 0% chance of that. So if there's nearly 100% chance they raise, we already know all of that. It's already been done. That's done. I think what's priced in, however, is let me bring up the S&P 500 while I close out our conversation today. Um, we're way up there in price. Look at this trend. And I believe a lot of this has to do with um, investors believing the Fed is going to pause. Like the Fed is done after today. And that would be very, very good news. No more bitter medicine. I shouldn't say poison. No more bitter medicine. It's like telling a child who's had the flu, and every morning you have to give them a spoonful of medicine. Oh, mom, why are you making me do this? Right? Well, today, maybe it's good news where no more interest rate hikes. So that's already been priced in. People are already making money. The only thing is that's not what the Fed has told us in writing, by the way. I must remind you that like 80% of FOMC members believe we're not done. Only 2 say we're done. Who is it? Waller and the Atlanta Fed guy. Whatever. Only 2 say we're done. Only 2. And the rest of the crew say we're not done. So I think the risk today is that whoever is pushing these prices up and up and up and up and up and up and up, they find that somewhere in today's meeting, we're told, no, the interest rate hikes are not done. There's at least one more. And that right now is fact. Some, and probably half of the FOMC, say even if the Fed hikes today, there might be not let's say 1/3. If I'm going from the top of my head, 1/3 of the FOMC members say even if the Fed raises today, they want 2 more hikes after today. I mean, like, it's not a small chance. So, anyways, if Powell says, "Whoa, we didn't even discuss being done," that's not priced in. So the news today is not the interest rate hike. The news today, what the market cares about. Remember, all of this stuff is not market. This is economic data. What the market is trying to do is figure out what the Fed is going to do next. And they've bet on one and done, and yet the Fed says 2 or more. And the market might have to wake up today and to the fact that there's another one, maybe 2 more in the future. That's why I say the market analysis is about positioning for the future. And the very interesting thing technically about that is if today ends up being a volatile spike, let me get off the Japanese stock market. Yeah. Let me bring up the US stock market. Okay. If today ends up being a spike, let's say the news comes out, pop, and then right, and then the press conference does this, would that matter technically? And this is the S&P 500, by the way. I know, right? Would it matter technically? Well, first of all, that would look a lot like a double top. What do you think? But let me add something to this because I have something in my mind, and I think I'm right. Biased pivots, bullish mode. Market's definitely bullish, right? Let's just look at the last 2 periods. True, 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 true. Let's plot this. I must have not done this correct. Hang on. Yeah, I left it on daily. Monthly. Okay, what was the trade plan for the month of July? This down here is a buy zone, so it's out of position. Very, very bullish, by the way. And when you're out of position bullish like this, your job is to ride the 4-hour 21. That's in the training course at Investor Bootcamp. But also, check this out. This is the monthly target for July that we set on Canada Day. Yeah, 26 days ago at Investor Bootcamp, the focus was that being a bullish trade plan. Okay, especially after you're making higher highs and higher lows, right? So if today you had a spike and then the Fed says more rate hikes are coming and that is not priced in, you could get a scenario like this. But here's the interesting thing. That would be after hitting the monthly target. It wouldn't just be random volatility. Okay. So again, on July 1st, from a bullish point of view, this is the expected target, the expected high for the month. So imagine now today, which is a Fed meeting, we hit that target, and then what? Smart money gets out, profit taking, and there's a potential for a change in direction, which would be seasonal, as you already know by looking at QuantBox. So that's it. I got to jump, babe. That was real. Thanks for being a subscriber to QuantBox. Hey, YouTubers, pay the $8. Check it out, quantbox.co. Peace on earth. May the pips be with you. May your profits be above average. Be careful during the FOMC meeting minutes or meeting today. And I will see you bright and early tomorrow. Remember,